Hi, welcome to the fourth quarter market update video. My name is Jason Gunkel, and I help lead our investment team here at Syverson Strege. Can't believe the year is almost over already. After we experienced a down year in 2018, it's been a remarkable rebound in 2019 as the markets have done very well. The U.S. stock market, as represented by the S&P 500, is up nearly 29% on the year. For the quarter to date, it's up nearly 7%, so your quarterly investment statement should look good again this quarter. It's been a very unusual year in that both stock and bond markets have done very well. The bond markets, as represented in the U.S. by the Barclays U.S. Aggregate Index, is up nearly 9%. So, what has caused these great returns in this unusual scenario where both stocks and bonds have done well? Well, the two major themes have dominated the headlines over the last 2 years, and those have been global trade and interest rates. So in 2018, we saw more pessimism with global trade, where we saw a number of tariffs being implemented. And we also saw the Federal Reserve gradually increasing interest rates, which slowed down the markets. However, in 2019, we saw a reversal in those two trends. We've seen more optimism with U.S. trade deals, particularly with China. And we've seen the Federal Reserve reverse course and start to gradually decrease interest rates, which has bolstered the markets and the economy. Looking ahead to 2020, what are the themes that we expect to affect the markets? We still think global trade will be in the headlines a lot. The Federal Reserve just this week, however, has announced that they expect to hold interest rates steady for all of 2020. And so interest rates will probably affect the markets much less going forward. We've seen manufacturing slow down in the U.S. and abroad, but it's been consumer spending and also high consumer confidence generated by very low unemployment, which has boosted the economy. And that'll likely need to continue in 2020 with high consumer spending for corporate profits to remain at record levels. The presidential election will no doubt be in the headlines a lot in 2020, and we'll continue to talk about that a lot next year and how it could affect the financial markets. And also, since we are in such a long bull market right now, there'll likely need to be more fiscal stimulus in either the form of tax cuts or more government spending to prolong this bull market. What does all this mean for your portfolio in 2020? We don't expect 2020 to mirror 2019 in the great returns that we've had. We are in the longest bull market since World War II, which has extended over 10 years now. So that will need to end at some point. We've talked a lot about a yield curve inversion this year, which is the unusual event where short-term interest rates become higher than long-term interest rates. This can be a signal that a recession might be on the horizon. And it can also be a signal that trends are about to reverse. So over the last year and also over the last 10 years, we've seen a scenario where U.S. stocks and also growth-oriented stocks, particularly the technology sector, have significantly outperformed. And with this yield curve inversion, it could be the beginning of a reversal where we think over the next 10 years, we'll start to see international stocks do a little bit better and also value stocks do a little bit better than growth stocks. You likely have seen in the news recently that Charles Schwab has announced they are acquiring TD Ameritrade. And as you know, your accounts right now are custodied at TD Ameritrade. This deal still needs to meet the approval of regulators, and the shortest time scenario is that it would close sometime in 2020, but it's also possible that it gets delayed and doesn't close for another year or two. You'll likely experience minimal change with this merger. It's possible there might be some paperwork involved, or you'll receive your statements from a different location. But we'll, of course, keep you updated on this. It has been a remarkable year, and we can hope that this bull market continues. and we will continue to watch over your investment accounts and make changes as necessary. Happy New Year to you and your family.